In today's video, we're going over Nike stock, ticker symbol NKE, and ultimately determining the intrinsic value of the company's stock through a discounted cash flow analysis. So stay tuned until the end, where not only after we review everything in regard to the company, such as its financials, but I'll show you how exactly you can value the company's stock. So for starters, it's important to have an understanding of what exactly they do. And Nike, with its subsidiaries, designs, develops, markets, and sells athletic footwear, apparel, equipment, and accessories worldwide. And they offer Nike brand products in 6 categories, which include running, Nike basketball, Jordan brand, football, training, and sportswear. This is how exactly the company's stock has been performing, and year to date, as a result of the whole market not performing as well, they actually were trading above the $100 per share mark, but that has come down as a whole, and they're currently trading close to $78, $79 per share, and most recently the company's stock was down close to 2% or $2 per share. This is a company has a market cap of close to $100 billion, trading at a PE ratio of 29.18, and it does offer a dividend yield to investors of 1.24%. And even though although it may seem a little insignificant, if you're somebody who just wants to get in order to find some sort of yield, this might be a play for you. And in terms of the 52-week high and the 52-week low, the highest it's traded at is $105 per share, and the lowest it's traded at is $60 per share. And then we move on to the financials and just analyzing some of the things that I, particularly pay attention to. So for the income statement, that would be the revenue, the net income, and the net income margins. So for revenue, revenues have been growing fairly consistently for the past 3 to 4 years. We see 6% growth in 2017, followed by 6% growth in 2018, and then 7% growth in 2019. In terms of net income margins, they've been fairly consistent as well, besides, one hiccup in 2018. But other than that, it's great to see that the company is really able to increase their revenues consistently and maintain the same amount of net income margins. Now, of course, as we're going to see in further analysis, that the revenue is expected to take a hit, especially, with current market, the current situation. So that consecutive streak of revenue increasing that we've seen might take a little bit of a hit. Then moving on to the balance sheet of the company, and I have to say that this is a pretty healthy balance sheet that we've seen so far in the Dow 30 stock analysis series that we've been doing. A lot of the companies that we've been looking at in the past, such as Boeing, such as Home Depot, they've just had a crazy amount of debt in comparison to the amount of cash that they have. But the great thing about Nike is that they actually have either the same amount of cash that they have in debt, or they have more amount of cash, as we see in 2019. And in terms of the cash increasing, it has increased every single year since 2016. And although debt did increase in 2017 and 2018, it did take a pullback in 2019, which is a positive. And that's why we have it in the color green. And by the way, if you have any questions about, why exactly the green and red means, you're supposed to read it horizontally. So for the cash, we read 3.1 billion, 3.8 billion, 4.2, 4.4. And I put that in the green because it's increasing year over year. And as for the debt, debt increasing is not really a good sign, but debt decreasing is a good sign. And since it decreased in 2019, we put it in the green. Then we move on to the cash flow statement, and I really like to look at the cash flow from operations, capital expenditure, which ultimately leads me to free cash flows. If you're unfamiliar with the free cash flow formula, essentially it's cash flow from operations minus capital expenditures, and you get free cash flows. So as we can see, cash flow from operations have been increasing year over year since 2016. And since capital expenditures have remained fairly consistent, free cash flows as a result have been increasing as well. And in terms of the percent change for the free cash flows, they have grown at 30%, 55%, and 22% respectively over the past 3 years. And once again, free cash flows are a great metric that investors should look at, especially if they're going to perform something like a discounted cash flow analysis, because what you have to do in a discounted cash flow analysis is project future cash flows, discount that to the present value, divide it by the shares outstanding, and ultimately get to the intrinsic value of the company. Now, although free cash flows have increased, for the past couple of years or so, it's very similar to the revenue situation where free cash flows are expected to decline in 2020. Then we move on to our investment thesis. Of course, with like any investment, you want to make sure that you have a couple of points as to exactly why you're even investing in the company stock in the first place. So one of the things that we can look to is the dominant position that Nike has. This statistic right here, as of 2018, Nike was actually the most valuable global apparel brand, and it had a brand value of 28 billion US dollars. They also offer a dividend yield like we were talking about before with a current yield of 1.24%. So if you're somebody who's just trying to get some sort of yield in current market turbulence and the situation, you might want to look at a company like Nike. Now, of course, they will be impacted because a lot of their business is dependent on consumers going outside and purchasing, running shoes, purchasing basketball gear, whatever the case may be. So if you're just somebody who just wants to stick in it for the dividend, and considering the fact that the stock has pulled back, that means that your yield is actually going to be higher. Then third, we have that growth in spending might pick up after, current circumstances, fall through. So after, everything like this passes, we are expected to see, a rise in personal consumption expenditures because people are expected to go outside after they've just been captivated in their homes for so long and just be purchasing things for themselves. And a company like Nike, which is the most valuable global apparel brand, they will benefit as consumers go out and purchase more things. This is what we were talking about in terms of the analysis. As we can see for the revenue estimate, the average estimate for current year is 39.23 billion, which would actually be only close to a 0.30% sales growth increase. Then for 2021, revenue is expected to increase to 42 billion, which is a close to 8% increase. So like we were saying, there is expected to be some short-term turbulence in 2020, but that growth in revenues is expected to pick right back up in 2021. And then in terms of the company's growth, they're actually expected to grow at 11.73% in the next 5 years. And that is about 3 to 4% greater than their past 5 years growth of 8.39%. So that's a great sign to see. Then in terms of their earnings estimates, they're expected for current year to do $2.27 in earnings and then next year to do 2.83. And that ultimately leads us to our valuation. I know this is something that a lot of you like to pay attention to. I've gotten a lot of comments and messages from you guys asking about whether you have a spreadsheet in regard to this. Walk us through it. So I am working on a spreadsheet, and if you would like that, definitely leave a like on this video. But in terms of just walking you guys through how exactly this works, the 2018 and the 2019 numbers, those are supposed to be, in the past, and then the 2020 to 2024 is what we're projecting. Now, I just use consensus analyst estimates for that. And then for terminal value, that is supposed to be the continuing value of the firm going forwards. We discounted that by the weighted average cost of capital. And if you're somebody who's unfamiliar with the weighted average cost of capital, I will leave a video down in the description below. And essentially we use that as our discount rate in order to discount the future free cash flows. So once we do that, we get the numbers below, the first line numbers. And once we add that up, we get to the sum figure. We add back the company's cash, we subtract the company's debt, and we get to equity value. Since the company's shares outstanding currently are 1.24 billion, we use that number and we divide that by equity value. And that ultimately leads us to our intrinsic value of the company's stock of $108 per share. And considering that the company's stock is currently trading at $78, $79 per share, that does mean that the company's stock is a buy, and it represents close to 36-37% upside. Now, I've mentioned this, in many of my other valuation videos as well, but you definitely don't want to take this as it is. Valuation is going to vary from one person to the other depending on the amount of research that you perform. I am just doing this at the surface in order to provide you with maybe some inspiration that you want to look deeper into this company's stock, but don't, take my valuation numbers to be 100% legitimate. It's important for you to do your own research and to figure out whether this is a company that you feel comfortable investing in. So I hope you found this video to be helpful, and let me know in the comment section below if you're a Nike shareholder and if you've been buying any shares in this market downturn. Like always, I'd love to hear your thoughts in the comment section below, And that about wraps it up for me. I'll leave some helpful links in the description, so be sure to check those out. You can leave a like, you can subscribe, and I'm going to see you in the next video.